Welcome back to Canada Pension Scope, your trusted guide for everything related to retirement income, pension benefits, and senior support programs in Canada. If you're currently receiving CPP, OAS, or GIS, or planning to apply in the near future, this video is especially important. We're unpacking the key changes to Canada's pension programs in 2025. From updated payment amounts to new contribution rules and policy adjustments, these updates could directly impact how much you receive each month, how your eligibility is determined, and what steps you need to take to maximize your retirement income. So grab a coffee, sit back, and stay with us until the end. We'll explain it all in a way that's easy to follow, and we'll give you 3 actionable tips at the end to help you get the most from your benefits in 2025. Let's start by looking at the broader picture of Canada's retirement landscape. In 2025, Canada continues its multi-year plan to enhance retirement income for seniors and improve the long-term sustainability of its public pension system. This includes key changes to the Canada Pension Plan, CPP, Old Age Security, OAS, and the Guaranteed Income Supplement, GIS. These programs are essential pillars of retirement income for millions of Canadians, and the changes coming this year are designed to reflect today's economic realities, particularly inflation, rising housing costs, and the changing nature of work. The good news? Many of the updates for 2025 aim to better match benefits with the actual cost of living and to provide greater fairness and predictability for future retirees. Let's begin with the Canada Pension Plan. The CPP is a contributory, earnings-related program that pays a monthly benefit to retirees based on how much, and how long, they've contributed during their working years. Starting in 2019, the federal government began a multi-phase enhancement to the CPP to gradually increase its income replacement rate from 25% of average earnings to 33%. In 2025, we enter the second major phase of this CPP enhancement. One of the key updates is the continuation of the year's additional maximum pensionable earnings, or YAMPE. Introduced in 2024, this second earnings ceiling allows higher income earners to contribute more and, in return, receive higher CPP benefits in the future. Here's how it works. The standard maximum pensionable earnings in 2024 was $68,500. In 2025, earnings between $68,500 and approximately $73,200 will now be subject to an additional CPP contribution rate. This means if your income falls in that range, you'll contribute more. While that may reduce your take-home pay slightly today, it directly increases the amount you'll receive from CPP once you retire. For current CPP recipients, the enhancements don't apply retroactively. However, there's still good news. Your CPP benefits are indexed to inflation, which means they increase each January based on the Consumer Price Index. Although the exact number won't be confirmed until December 2024, economists project a 3% to 4% increase in monthly CPP payments for 2025 due to inflation. That could mean an extra $25 to $50 per month for many retirees. And remember, whether you're employed or self-employed, the enhanced CPP contributions are mandatory. If you're self-employed, you'll continue to pay both the employee and employer portions. This is why it's more important than ever to review your contributions, especially if you're still working past age 60. Talk to a financial advisor about the best time to apply for CPP to maximize your retirement income. Now let's talk about old age security. Unlike CPP, OAS is not tied to your work history or contributions. Instead, it's funded through general tax revenue and available to most Canadians aged 65 and older who meet residency requirements. In 2025, OAS will continue its quarterly inflation adjustments, which means your payments can go up every 3 months, not just once a year. This helps your OAS keep pace with real-world price increases in essentials like groceries, housing, and utilities. In 2024, OAS increased every quarter due to rising inflation, and that trend is expected to continue into 2025. Here's a quick breakdown of current and projected payments. As of now, the maximum monthly OAS payment for seniors aged 65 to 74 is approximately $713.34. For those aged 75 and over, it's about $784.67. In 2025, those figures are expected to rise to around $735 and $810 per month, respectively. But there's an important caveat: OAS is subject to a clawback, also known as the recovery tax. In 2025, if your annual income exceeds approximately $90,000, your OAS payments will begin to be reduced. And once your income hits around $145,000, you may lose the OAS benefit entirely. This is why retirement income planning matters. RRSP withdrawals, pensions, and even capital gains can push your income over that threshold, resulting in lost benefits. If you're close to that line, it's wise to speak with a tax advisor about minimizing clawbacks. Let's shift focus to the Guaranteed Income Supplement, or GIS. This program provides tax-free monthly support to low-income seniors who already receive OAS. It's one of the most important benefits for older Canadians living on modest incomes. Like CPP and OAS, GIS is adjusted annually for inflation. In 2024, the maximum monthly GIS for a single senior was about $1,065. In 2025, it's projected to rise to roughly $1,100, an increase of $30 to $40 per month for many recipients. But there's more. The federal government is expected to raise the GIS income exemption threshold. Currently, seniors can earn up to $5,000 per year from employment or self-employment without any reduction to their GIS. For the next $10,000, only 50% of the earnings are counted. That means you can earn up to $10,000 and only have $2,500 of it count toward your GIS income test. In 2025, that exemption is likely to increase slightly, possibly to $5,500 or $6,000. To better reflect inflation and the realities of part-time work for seniors. This is good news if you're still working part-time, freelancing, or running a small business in retirement. You may be able to earn a bit more without losing your GIS. There are also talks about simplifying the GIS application and renewal process. Many eligible seniors miss out simply because they don't reapply or aren't aware they qualify. The government is working toward automated renewals by integrating tax data. If you file your taxes on time, you may not need to manually reapply in the future. Another point many overlook: GIS is calculated based on your previous year's income. But if your income suddenly drops, say your spouse passes away, or you lose a job, you can request a reassessment for faster relief. So, what do all these updates mean for you? If you're already retired, you can expect your monthly CPP, OAS, and GIS payments to increase in 2025, mainly due to inflation and ongoing program enhancements. If you're still working, your CPP contributions will go up slightly, but so will your future retirement benefits. If you're a low-income senior, you could receive more from GIS and have greater flexibility to earn income without impacting your benefits. These changes are designed to improve financial security for seniors, but they also come with responsibilities. You need to stay informed, file your taxes on time, and monitor how changes in your income affect your eligibility. We recommend checking your My Service Canada account regularly. It's your dashboard for tracking your contributions, viewing benefit estimates, and ensuring all your information is accurate. Before we wrap up, here are 3 practical tips to help you get the most from your benefits in 2025. Tip number 1. Plan your retirement income strategically. Use a mix of CPP, OAS, GIS, and personal savings. Try to spread out your RRSP withdrawals to avoid pushing your income into the OAS clawback zone. Tip number 2. Consider deferring your CPP or OAS. For every month you delay after age 65, your benefits increase. Delaying CPP to age 70 gives you up to 42% more. For OAS, delaying to 70 means a 36% boost. Tip number 3. Stay financially aware. Use a financial advisor, a trusted family member, or tools like My Service Canada. The more informed you are, the better decisions you'll make, and those decisions can put real money in your pocket. Thanks for watching our deep dive into Canada's 2025 pension changes. We hope you found this video informative and easy to understand. If you did, please hit the like button and subscribe to Canada Pension Scope for regular updates on pensions, retirement planning, and benefit strategies. If you have questions or topics you'd like us to cover, drop them in the comments. We read every one and may feature yours in a future video. Until next time, take care, stay informed, and remember, your financial security in retirement starts with knowledge.